Good afternoon. My name is Scott Redler, Chief Strategic Officer at TeethRelive.com. It is Tuesday, and let's get into the recap. So we started off the day under a little bit of pressure, not sure where we would hold. We know that in the last two sessions, we've had a pullback off the recent move that we've seen over the course of the past 4 or 5 weeks. We talked about the accelerated trend that has kept this tape tight, where they haven't let any shorts out. They haven't made longs feel comfortable because it was so fast. That changed a bit, as of the end of last week into yesterday, and now we seem to have found some support, so we'll figure out if it builds from here or not. And there are definitely some others, some stocks acting better than others, and we have to keep rotating around. You look real quickly at the SPX. Here again is the chart. Here is your S&P. All right, here was your quick little bottom. Here was your double bottom with the red dog reversal. Here's when some power came in. This is when we broke above resistance and retested it right there. And then here's when we pretty much broke the 8-day moving average right there, which we talked about, which was right around, just say, what is this, about 2090? And now we've found a bit of a 2-day support here right above the 21-day. So it didn't have enough power to trade below 2068. It actually came right into it by a handle. So now the question is, can it go sideways and then go up? Does it get a little follow through tomorrow? You could probably draw a little resistance right here. So if it wanted to bounce a bit, this would be that descending channel right there. We came in today not knowing if Apple being down $3 would bounce or not, or would it really pressure the overall market, or would it be isolated just to Apple? There was some news out there that they're ordered 10% less of what they normally order by a wirehouse out there. We'll see if anyone refutes it tomorrow. As of right now, though, Apple had a big gap down, which is very, not healthy technically. This is what we talked about. Thank goodness we didn't take it home yesterday. Here is your, support gap below it, and now you have a pretty big hole right here. When you have a hole in a chart, it's very negative unless it gets filled very quickly. If you remember, after earnings, Apple had a very big hole in the stock. So this was the hole in the stock after earnings that never got filled, okay? And then it wound up developing this bear flag before lower prices. So now you have a high, you have another lower high, and now you have this hole here. So at this point, I am not in Apple, and if Apple does not, basically fill this hole soon, very quickly, usually 1 to 3 sessions, chances are this open gap could lead to lower prices. So you have to be a bit careful in Apple. If you tried it intraday, I did try it intraday. I bought it in the first, in the first down move, okay, and it looked somewhat decent, okay, and then all of a sudden, the small rising channel in the 5-minute got broken right here, before breaking the morning lows, which is where a lot of people got stopped out. I got stopped out right around here, and I haven't revisited, and we'll have to see. So all in all, Apple right now is somewhat in the penalty box. But not every stock is in the penalty box. At first, tech was definitely a little weaker, but then, Amazon went green. Amazon still looks like best in breed. What's Amazon doing? Amazon is holding the 8-day moving average going sideways, and that's after taking out the post-earnings high above the 8-day moving average. So that still looks good. Maybe at some point Amazon could take out this spot here, which is, what is that resistance there? That's 662. I think I saw Google go green also, basically holding the 8-day moving average, and that's why we watched the 8-day, and that's where it held. So now we'll see if these things can continue to go higher. As of right now, holding support. NFLX, which is, at first couldn't get above this resistance, which was right here. Had a wind up, a decent day today, almost engulfing all day yesterday. Then at some point, maybe this gets above 115 for a move, to at least here, if not higher than that. So Netflix looks okay. My other focus today was Facebook. I put a chart on Twitter. I said, you know what? After 3 down days, this leader might be buyable. Let's look for a red dog reversal with Facebook, and it worked out, pretty much like planned. We talked about how, you had a lot of different buy areas. This was one. This red dog reversal was another. So after post-earnings high and pulling in, I put this chart in here and I said, if it could break below What is this? This was 105.86. Come back above. You get your reversal pattern on the 8-day. You're a buyer. And now this closed pretty well. Now maybe at some point you get a little follow through above this, but this was a great day trade. So if you took it at that level, you made almost $2 with very limited risk. And now, if you hold a portion of it, we'll see if it could help lead back to highs with the other strong acting stocks like Amazon, Google, Netflix, Facebook. Those are still acting strong. Apple is a bit in the penalty box. Some bios acted well. The IBBs went green. Okay, so perhaps some of these bios are back in the mix. Okay, trade long versus this. Okay, this support here is a little bit closer to 327. We'll see if at some point this potentially breaks this little downtrend and starts to act better. The Russell acted a little bit better also. The IWM, okay, still hanging in there. So still hanging above this little breakout area on the Russell. The banks, some of them reversed pretty well. Goldman Sachs still holding here. This Goldman Sachs is trying to hold this gap here. So for the banks, it's pretty strong, and we'll see if it can continue to the upside. JP Morgan, not as strong as it actually came into the gap, but still looks okay. Bank of America, actually, I think is holding in, relatively well. I'm actually in this one, thinking perhaps with a little bit of time it could take this out, to the upside. Oil didn't leak further, kind of hung around, still somewhat of a problem with the strong dollar, but it's still in there, it's still in the mix and not really falling apart. We'll see, if it remains, out of play or starts to break lower, which would be somewhat of a headwind. Really, today I think was a semi-constructive day. Things felt still a bit heavy. We have now, we had about a 2.5% move off the highs in the S&P. I don't know if that was enough. If you got rid of some stocks into strength and you bought some stocks on, in the dip today, you could maybe perhaps have caught a pivot. For me, I came in flat again, and then in the down move, I bought a little Facebook, which was a nice purchase. I'm in a little Netflix, I'm in a little Bank of America, and I'm a little Spider. So put on 4 positions to wait and see, and maybe we'll get a little follow through tomorrow. If not, I'll use the pivots of support we've seen yesterday and today to move forward. And we're in November, and we have some buybacks and some things going on, but it's a very selective, narrow tape. So you need to be where the action is. And if you try and look for Me Too type plays, that's not what you're looking for. You're looking where the action is, where the volume is, and the best patterns. Just choose your A plays. No need to be involved with the B's and the C's. I'll see you tomorrow morning. Actually, you know what? I'm not in tomorrow because just can't be in the office tomorrow. I'll probably be trading on a short hills. So either Mark, Rob, or Evan will be hosting the morning call. So good luck.